Welcome to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. Over the next half an hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show, the UK government has used its latest fiscal statement to push millions of economically inactive working-aged adults back into employment. Yet union bosses and opposition leaders remain unconvinced that the Chancellor's budget is a path to growth for this country's beleaguered economy. Our business correspondent Simon Pusey and Josie Anderson, a managing economist at the Centre for Economic Business Research, will be joining me shortly to assess who are the winners and losers following the midweek announcement, and what are the long-term implications for African startups following the collapse of Silicon Valley Bank. I'll be putting that question and more to Benjamin Dada, a fintech and startup growth consultant who will be joining me here in the studio. Then later, I'll be looking back at some of the biggest business news stories of the week. But first, before we get into our headline story assessing the UK spring budget, let's look back at a symbolic event that took place on Monday, which was Commonwealth Day. King Charles III, who succeeded his mother as the head of the Commonwealth, called on member states to unite and be bold to make a difference in the lives of the 2.6 billion people who live under the Commonwealth umbrella. The King was joined by other senior members of the royal family, including the Queen Consort and the Prince and Princess of Wales, at a special service held in Westminster Abbey. Guests of honour in the congregation of 2,000 included Fayem Naomi Mataafa, the Prime Minister of Samoa. To other news now, opposition parties have vowed to reverse the Chancellor's decision to abolish the lifetime pension allowance in a move which threatens to plunge the government's back-to-work drive into chaos. The decision has emerged as perhaps the most contentious of Jeremy Hunt's budget announcements, as it would increase employment by just 15,000 people and has been described as a tax cut for the wealthiest 1%. Other takeaways from the spring budget include an extension of free childcare of 30 hours per week to parents with children aged from 9 months to 3 years. The energy price guarantee has been extended for an additional 3 months, which will keep the energy cap at its current £2,500 level rather than rise to £3,000 from April. And as expected in the budget, Jeremy Hunt confirmed that the headline rate of corporation tax will rise from 19 to 25%.
Madam Deputy Speaker, in the face of enormous challenges, I report today on a British economy which is proving the doubters wrong. In the autumn, we took difficult decisions to deliver stability and sound money. Since mid-October, 10-year gilt rates have fallen, debt servicing costs are down, mortgage rates are lower, and inflation has peaked. The International Monetary Fund says our approach means the UK economy is on the right track. Today, the Office for Budget Responsibility forecasts that because of changing international factors and the measures I take, the UK will not now enter a technical recession this year.
After 13 years of his government, our economy needed major surgery. But like millions across our country, this budget leaves us stuck in the waiting room with only a sticking plaster to hand. A country set on a path of managed decline, falling behind our competitors, the sick man of Europe once again.
Well, earlier I was joined in the studio by our business correspondent Simon Pusey for his assessment of the government's renewed fiscal policy. Simon, as to be expected, before the actual day there were several leaks to the media. I'm not sure if that's what's made Jeremy Hunt's spring budget slightly underwhelming. The mood music is some are happy, some are not happy. What's been the general reaction?
I think nothing too dramatic. Jeremy Hunt is a very seasoned politician. He knows how to not rock the boat. And this is quite a conservative budget. Labour saying that this isn't helping the poorest, it's only helping the wealthiest. Well, you could write that about every Conservative budget recently. Obviously, it doesn't have the same impact that maybe Liz Truss's budget had not too long ago, Kwasi Kwarteng. But yeah, so taxation of wages, the cap on the amount workers can accumulate in pension savings before having to pay extra tax has been been abolished. The idea there, he says, is to try and keep doctors in the profession. The NHS is under a lot of strain since post-Brexit, and he's saying that various pension rules at the moment mean that doctors are only working a few days a week. So that was his kind of excuse for this, but it obviously helps people higher
only
earners.
15,000 people.
Right, but yeah, exactly. It helps the very richest.
Yeah.
And Labour are saying if they get into power, which they probably will, they're going to abolish that. Free childcare, this is been universally accepted as quite a good thing. Actually, they've pinched it from Labour. Labour promoted this a couple of years ago, and so it's a kind of win-win. The main problem here that Labour are pointing out is the timing of it. It means that it'll be rolled out from April 2024. That means anyone with young children now or babies now are not going to be able to claim this. So a lot of people are saying, well, this is great, but this is too late. It's going to come in 2025. That's too late for us. The Economy and Public Finances, the Office for Budget Responsibility has predicted that the UK will not be in a recession, a technical recession, this year, which is great news because a couple of months ago we were saying we are now in a recession.
And it'll be the deepest and darkest.
Yeah, and the economy will still shrink by 0.3%, but that doesn't mean it's going to be in recession. So that's like good news. It's a good sort of headline that the government wants to get out there. So that's what they were hoping. That's what they opened the budget with. But Jeremy Hunt does admit the tax burden is going to be higher for a while for people. And generally this does squeeze people at a time when prices are going up, wages are not keeping up. So there's not much really there for lower income earners, but Jeremy Hunt points to the fact that the energy relief will continue for a little bit longer. There are various other things that have come in to help people. But the Institute of Fiscal Studies saying, interestingly, that we're becoming a higher tax economy. That's not something that the Conservatives want to stand for. Fiscally, that's not what they want to be known for. They want to be known as low tax. Inflation is coming down, but prices are going to remain high for 2 years and earnings won't have caught up. And they say that it's highly uncertain what the impact of the extension of that free childcare will have on the labour market. Obviously, again, the Conservatives, the problem we have at the moment post-Brexit is not that we have unemployment, is that we have too many vacancies and positions for people to take up. And then Labour obviously criticising Rachel Reeves, the Shadow Chancellor, criticising the speed at which those childcare measures will be introduced and saying that on pensions, Labour has already vowed to reverse that abolition of the 1 million tax-free cap on savings. So it's kind of as you'd expect. It hasn't rocked the boat too much. Jeremy Hunt is a very seasoned politician, like I said before. He knows kind of what he's doing. And I think they're thinking of the next election, of course, with all of these. They're thinking, right, let's pretend this is for doctors. That's what we'll say. But then actually the top earners, so we've got them on side. And then, right, they're thinking mothers and young families. They're going through the thing and ticking off what they want people to hear ahead of a next election, which is obviously coming up not too far away. And yeah, just it kind of does tick those boxes. But I think it doesn't really help those people who are really struggling at the moment in terms of rising living costs. Of course, they've extended that the energy relief scheme, but the winter is sort of slowly edging out. So it's one of those, it's a pretty conservative, typically Tory, I think, budget there.
It is very conservative, typically Tory. I've got to say, just very briefly, I did read a tweet yesterday, and one seasoned economist said, this potentially could be an election winner, this, free, expanding the state childcare for 1 to 3-year-olds, potentially. Yeah, I mean, I think it's a good idea. No one's really criticised it. Labour has criticised the speed at which it can be rolled out. But like I said, it was really a Labour idea, this. So I think that's quite a good idea from the Conservatives to pinch something that isn't hugely expensive. They've done things like they've cut a bit on sort of fuel duty and things like that. But yeah, this is the real sort of headline-winning grab from it. But it's not that expensive and it pleases everyone, really. So that's a kind of vote winner. And they need a lot of that, don't they? Because they're so behind in the polls. So it just seems like it's, again, the sort of grown-ups seem to be back after Boris Johnson. It seems like this is sort of return to business as normal. You've got people who are fiscally confident and competent sort of behind that lectern, whereas in the days of Boris Johnson and Liz Truss, obviously it was sort of mayhem. This is a bit more return to stability. But I think they need a lot more of those kind of headline-grabbing, vote-winning policies if they're going to have any chance of beating Labour at the next election. Absolutely. Thank you, Simon. Thank you. Let's remain with this topic of analysing the small print from the Chancellor's spring budget. For more on this, I'm now being joined by Josie Anderson, a managing economist at the Centre for Economic Business Research. Josie joins me from here in the British capital. Josie Anderson, it's a pleasure to have you on Channel's Business Global today. So mixed reaction to the Chancellor's budget. I suppose if we look back to when he delivered his autumn statement, the picture of the UK economy is slightly brighter. But please tell us who you think the winners and the losers are.
Yeah, thanks. So I think there are a couple of notable winners from the budget yesterday. Certainly parents of young children or parents thinking about starting a family in the near future have seen a benefit from the budget in the form of those 30 hours of free childcare that will fully be implemented, actually, not until late 2025. But we're still going to see that come in. So parents thinking about having children will definitely benefit from that, and also the wraparound care for schools. And so we're definitely seeing Jeremy Hunt enticing parents back into the labour market through the form of childcare. And then similarly, we've also seen Jeremy Hunt try to get older workers to remain in the labour market for longer through pensions reform. And so now older workers can add a lot more to their pension. He's completely scrapped the cap on the lifetime allowance for pensions. And so older workers can save a lot more in tax from that respect. In terms of losers, we've seen income tax and ISA allowances continue to be frozen, and when inflation is running at 10%, this kind of has the effect of a stealth tax. If wages are rising but allowances are frozen, that means that people are paying more in tax. So kind of everyone who earns over £12,000 a year in a way is a loser in that respect.
The Chancellor has said that we're likely to avoid a technical recession this year. I suppose that's good news, considering the OBR and the Bank of England, as well as the IMF, have said that we are supposedly going to be in our deepest recession this year. We've avoided that. He also says that it's forecast that inflation is likely to drop from 10.1% to about 2.9%. Do you think that we're starting to see signs of a recovery, Josie?
Well, it's interesting because the OBR, yes, although is saying we're not going to enter a recession this year, they are still forecasting a mild contraction in Q1. So that's the first 3 months of this year that we're in right now. And then also no growth in Q2. Similarly, we're forecasting a mild contraction in Q1 and also a very mild contraction in Q2, 0.4% contraction over the year as a whole. So we are actually forecasting a very mild recession, even though our forecasts are actually very similar to the OBR's. But I think at the end of the day, this is a picture of a flatlining economy. And so while it's great news that, you know, we're very close to avoiding a recession, and it may well happen, although we are forecasting a mild recession, the economy still isn't really growing. So yes, it's great to avoid a recession, but inflation is still above 10%. We're not quite as optimistic on the OBR as the OBR on inflation either. Actually, we're anticipating it will remain above 4% this year at the end of the year, and will very, very slowly come down towards 2%. So it's a much healthier picture than we imagined it would be in November. But still, there's a lot to do on getting the UK economy growing, actually, because right now we're seeing a flatlining economy.
Absolutely, there is so much to do, particularly stopping those strikes, which has impacted all of us this week. Lastly, Josie, there were no notable tax cuts. I suppose, you know, even if you're not an economist or into politics, everybody tries to look at a budget to see if there were any giveaways. I suppose the Chancellor is a kind of steady as she goes, a steady pair of hands. Do you think he's trying to maintain that line to just reassure global markets after the disaster we had following Kwasi Kwarteng's budget?
Exactly. Jeremy Hunt is trying to show fiscal responsibility, to show that he can get UK borrowing back under control, reduce the amount of debt we have, and show that he is responsible for getting that debt down. At the same time, I think he's trying to kind of reduce the amount of borrowing, but we're probably going to have an election in 2024. And so perhaps he's trying to get finances back under control in order to cut taxes next year. So we'll see if that happens. We think his forecasts and the OBR's forecast for public finances are heavily dependent on high growth over 2024 to 2026. And we're not as optimistic on the UK's ability to get back above 2% annual growth in GDP. We think it will be very difficult to stimulate the economy to grow by that much. And we're not quite as optimistic as his ability to get public finances under control, which is heavily dependent on stronger GDP growth. So I think that will be the real test. Can he get the economy to grow? And will that help public finances?
Absolutely, and we'll just have to wait and see what the Monetary Policy Committee decide to do at Threadneedle Street next week, Thursday, with those tax hikes. Thank you so much, Josie Anderson, a Managing Economist at the Centre for Economic Business Research. Thanks for your time today.
Thanks a lot.
Coming up on Channel's Business Global, Benjamin Dada, a fintech and startup growth consultant, will be joining me here in the studio to assess the long-term implications for African startups following the collapse of Silicon Valley Bank. And I'll be looking back at some of the biggest business news stories of the week. All of this after the break. Do stay with us. Welcome back to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. In a moment, I'll be speaking with Benjamin Dada, a fintech and startup growth consultant, to discuss the long-term implications for African startups following the collapse of Silicon Valley Bank. But until then, here's a breakdown of the biggest business news stories of the week. TikTok is to be banned on official UK government phones over security fears. Prime Minister Rishi Sunak has been under pressure from senior MPs as the Chinese-owned app is already banned from official phones issued by the EU, and the US bars its use on federal government devices. TikTok has sought to distance itself from its Chinese roots and moved its headquarters to Singapore in 2020. ByteDance, the owner of the popular social messaging app, said it was disappointed by the UK government's decision, adding that the ban was based on misplaced fears and seemingly driven by wider geopolitics. Staff at John Lewis will miss out on their usual annual bonuses this year after the UK retail group recorded a £78 million loss in its latest financial update. The group, which runs the department store chain and Waitrose supermarkets, is currently battling with rising costs and unprecedented losses. Credit Suisse shares sharply rebounded on Thursday after the lender revealed plans to borrow up to $54 billion from the Swiss central bank. Credit Suisse said in a statement that the additional funding would support its core business and clients as it takes the necessary steps to create a simpler and more focused bank built around client needs. Credit Suisse has faced several crises in recent years, from a corporate spying scandal, losses related to the collapse of supply chain financial group Greensill Capital, and the collapse of hedge fund management company Archegos Capital. The turmoil has added to concerns about the broader banking sector after Silicon Valley Bank and Signature Bank, two US mid-sized firms, collapsed last week. This was the basis of the discussion I had in the studio earlier on in the day when I was joined by Benjamin Dada, a fintech and startup growth consultant. Benjamin Dada, it's a pleasure to have you in the Channel's Business Global studio. Let's talk about Silicon Valley Bank, which, unless you're a tech guru like you, many of us, including me, we had no idea that this bank even existed, but it has it's triggered a ripple effect. There are fears. I know there's some breaking news about Credit Suisse as well. You know, could this potentially be the beginning?
And stuff like
exactly. But let's focus on how this is going to affect the African startup ecosystem, because for those who don't know, Silicon Valley Bank was mainly for the tech community, and they're all quite worried. Should we be worried in the continent about the ripple effects?
Fair enough. Like, the Silicon Valley Bank was very targeted towards the tech community, which also kind of created a concentration risk, right? Because, you know, most of their funds was from the tech community.
Yeah.
In terms of whether I'll be worried, let me give you some context around how African startups come to interact with it. Today, when you want to raise money, and most of the money we raise in Africa right now is from like international investors, they advise you to create an international bank account, a US bank account. And for you to do that, you need a US registered entity. So people do like Delaware and stuff like that. But one of the ways people do that incorporation is through like, you know, Stripe Atlas. And Stripe Atlas, which is the incorporating body, recommends, you know, Mercury and Silicon Valley Bank. So people always just, you know, once they think about creating an entity in the US, they automatically just think about Silicon Valley Bank.
Oh, wow. So they all have heard of this bank.
Yes. So like you can expect that many people would have considered Silicon Valley Bank. But then there was like a fortunate incident where, you know, at some point Silicon Valley Bank wasn't really tailored for African startups.
Yeah.
So other banks like Mercury, Brex, you know, began to take some of our business. But what then happened is once people received their money in like their US bank account, they then move it
straight
offshore.
away.
Yes,
straight away. Yeah.
But then you can expect some people will still leave some of that money in that bank account and they use it for future round raises. So for African banks right now, or for African
We dodged a bullet.
Yeah,
We dodged a bullet.
We dodged a bit because they weren't
Because
really
of the
accepting.
bias.
Yes, because of the bias.
That's quite interesting. So does that provoke another question? Whereas it's like, well, okay, we need to look after ourselves. Like kind of what happened in Brexit, where you were like, oh gosh, not all that glitters is gold. There is a place called home that I could go to.
Yeah.
Are, the African startup ecosystem now thinking, hey, this is a great opportunity. They don't want our money. They don't want us to bank with them. Look what could have happened to us potentially if we were there.
Yeah.
Is this an opportunity for us to build up our own local investment opportunities?
So I'm on some WhatsApp groups and people have toyed with the idea, but rather jokingly, because it looks like some of the reasons why these things are not working is very systemic or like regulatory driven.
Yeah.
So even if like a couple of African founders or investors come to build a bank, they will still be somewhat subject to the US regulations and stuff that prevented the likes of Silicon Valley Bank from fully accepting our business.
Yeah.
Right. However, we feel like, there will be more willingness to figure out a way to make this work if it was owned by, an African consortium, or if it was owned by like African banks and stuff like that. So, that's really where most people's head is at, which is like, what can we be doing now to make sure that we have better representation when it comes to like, having money in USD. But then there is like a dicey situation, which is like, I can actually store USD, but it's just about now the location of the bank. Because for instance, if you have a bank like a tier 1 bank, let's call it UBA, right? You get a domiciliary bank account, right? So I can keep my USD in UBA, but what's the ease of transfer for someone in Texas or someone in Silicon Valley to move money from their own USD into my UBA USD? And what governs the deposits or the there are a lot of rules and regulations around it that makes investors confident with you coming to bank where they're already familiar with the laws and the money movement. So yes, there's an opportunity for people to come together and start rethinking, because I know people have thought about this before, but just start rethinking, how do we make sure like we're well represented and we have someone or a group that's speaking for our interest.
There are some suggestions that perhaps there could be some implications for Africa. Forget the kind of banking stuff, the risk. Because now investors are like, do you know what, I'm going to hold my money back a little bit. Let's wait for the SVB to subside and see what happens. Are there fears that, oh my goodness, I was supposed to get this money, I may not get it now because investors are on edge? Is that part of the WhatsApp chat too?
Not really. Because like, if you think about the ecosystem, there are like funding partners, there are banking partners. If you've signed a term sheet or if you're expecting money from an investor, the destination of that money is not really a problem. Like all they really care about is their returns and like the terms in which they're giving you that money. So how much of your company are they getting, etc. So there's no real fear that investors would not send money again. It's not a question of, from the startup's end, what bank account am I going to create? So many people have been diverting towards all the other options that are available at the moment. Brex, not Brexit, but Brex, Mercury as well. So, there's no real fear that investors are going to stop sending out money. Another thing is, I think an effect would be that Nigerian government, right, is actually going to...
Current, incoming... Sitting.
Let's just call it like the agency, like the central bank.
Yeah.
Is actually going to become more stern with the way people are using their microfinance bank licenses. And because like if you think about it, Silicon Valley Bank wasn't regarded as one of the too big to fail banks. In Nigeria context, that's like tier 1 banks. So the Fugas, First Bank, UBA, etc. So, but we have a lot of startups now that are offering like digital banking, remittance startups. They're taking up, licenses like microfinance bank that doesn't require a lot of cash reserves, but then they're doing volumes like a UBA.
Like SVB
yes,
were.
Like SVB was.
Which
so
is
like,
why they decided to put it in the bonds,
yes.
Which is why...
So like, I think that's what the CBN now is going to be thinking about. Like, how do I make sure that, customer funds in licensed digital banks in Nigeria don't go through this kind of bank run, or how are we able to better ensure? Because like NDIC in Nigeria, which is like the equivalent of FDIC in the US, does only 500,000 naira for like insurance, right? And that's a little amount of money.
And I must get my fintech knowledge up to date. So I've got to have you back on
No problem.
so I can learn so much more.
Yeah.
Benjamin Dada, fintech and startup growth consultant. Thanks for coming to join me on Channel
Thank you so much.
Global. Thank you. Sadly, that's all we have time for today, but as always, do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channel's Business Global. Goodbye.